Hello and welcome to the BizNews Business Briefing. I'm Lucy Ferreira for BizNews.com. In today's show, Alec Hogg takes us through a detailed wrap-up of the markets last week, focusing on JSE-listed shares, looking at the biggest movers and the reasons behind those moves. We also have a fascinating interview from our partners, the FT in London, where Gideon Rachman asks if China really would go to war over Taiwan. From today, in order to bring you the freshest market updates, BBB will be available in the early evenings after the South African markets close. And now it's over to Alec's in-depth review of last week's markets.
Thank you, Lucy. Then let's have a look back at what happened in the past week. The S&P 500 index closed 1% lower, the Nasdaq Composite 2.6% lower. That broke a 4-week stretch in the United States of higher share prices. Here in Johannesburg, the JSE All Share Index also eased back. That was 1.5% lower, but the big story locally is the Rand. As the US dollar index had its best week since March 2020, it impacted the South African Rand as well, but we also lost against other crosses. The Rand lost 80 cents against the US dollar in the past week, down from 16 Rand and 19 cents to buy $1 on Friday the 12th to 17 Rand where we are at the moment. Against the pound, it wasn't quite as bad, a 50-cent decline from 19 rands and 62 cents to 20 rands and 12 cents. And against the euro, a 46 cent easier, 16 rand 59 a week ago. To buy a euro now it costs just over 17 rand. The Brent crude oil price, after looking very encouraging at one point, ended the week 1.5% lower. It started at $98.15 a barrel and ended off at $96.72. So the weaker rand, unfortunately, offsetting the benefit of that 1.5% decline in crude oil as far as motorists are concerned. The gold price came back quite sharply. That was 3% lower from $1,802 Friday the 12th of August to $1,747. But the big move has been on the more riskier assets. Crypto, there the Bitcoin price dropped from $24,500 to $21,500. That's a 12% decline in the past week. The Geltec crypto basket, as a consequence, in the past week is also down by 12%. So what's going on? Well, on Friday, we had quite a significant pullback in the United States as the view is growing that the stock market is divorced from economic reality. When you look back at what happened pre-pandemic, real GDP in America is up 2.5%, but stock market indices, after all the bumping around, are 30% higher. That's been justified by an increase in profits, which are 35% higher relative to that time. And these are numbers all that we pull from the Wall Street Journal. But the problem looking forward is in a weak economy and one that is being impacted by higher interest rates and the Fed trying to bring the inflation rate down, that earnings growth is surely unlikely to be able to be sustained and thus to quantify or to justify the current share prices. That's the view that's going on in Wall Street. Here at home, well, the decline of the Rand in the past week was very much related to this move away from riskier assets. The Rand is regarded as a risky asset in the foreign exchange markets, and the strength in the US dollar. So that combination didn't do well for the South African currency. I had interviews with Mike Brown of Nedbank and Sim Shabalala of Standard Bank in the past week, looking at their financial results to the end of June. These were half-year figures. Both of them, when you listen to or watch those interviews on BizNews TV, you'll get the understanding that they're pretty solid numbers, which do justify the recent strength in South African bank share prices. In the US, the stocks on Friday do show that Mr. Market's also worrying about how aggressively the Federal Reserve will tame inflation at the September meeting. That was initially thought that the Fed would only go about 50 basis points or 0.5%. Now, after seeing the release of the Fed minutes from the most recent meeting and public statements from Fed governors, there is a view that they could be having a third successive 75 basis point increase. And hence, this good run in the US markets, which impacts the rest of the world, coming back and seeing a break in a 4-week trend. Lest we forget, in Ukraine, the war continues there. It does appear as though the balance is certainly shifting towards the defenders. A drone hit the HQ of Russia's Black Sea Fleet in the Crimea on Saturday at the city of Sevastopol. It got through heavily fortified areas, and it shows that drones seem to be able to get past whatever defenses the Russians are putting up. Earlier this month, a blast at an airbase put a half of Russia's Black Sea naval aviation combat jets out of use. Let's come back to South Africa, and on the Johannesburg Stock Exchange in the past week, one of the big movers was Gemfields, which was up by 22%. Now, I've been scouring the SENS and Stock Exchange News Service and elsewhere, but I can't see any reason for the surge in the share price of a company that is run by the son of former BHP Billiton CEO Brian Gilbertson. Sean Gilbertson is the CEO of Gemfields. Gemfields has got an emerald mine in Zambia, the ruby mine in Mozambique, which had a little problem when we had the terrorists who went into that part of northern Mozambique. It stopped production there, but it appears as though everything's back on track now. The share price rebounding to challenge the all-time high of R3.60 a share. It's interesting to look back and see that Gemfields traded in started 2021 at just R1.35. So there are gems, excuse the pun, to be found on the Johannesburg Stock Exchange if you look hard enough for them. Outside of the banking results, the big news of the past week was Grindrod and its subsidiary Grindrod Shipping, which brought out sparkling financial results on Thursday. And as a consequence of that, already elevated share prices went higher still. Grindrod itself finished the week 8% higher at an all-time high of R11.33. It started the year at R4.80. And the story of Grindrod is all about competing with government in infrastructure. Grindrod took a view back in 2018 that it would invest in Mozambique and offer an alternative for exporters from South Africa, and that has paid off. A business review and trading update from Grindrod for the 6 months to end June show that volumes in Maputo port are rising by 30% a year, and the earnings as a result of that were up by 100%. So it's been a phenomenal run for the company that is offering an alternative to the very badly managed South African ports. Perhaps they will also be in the front of the queue when it comes to bidding for the inevitable privatization of the management of those ports. So Grindrod and Grindrod Shipping, which is a NASDAQ-listed shipping company, was up 16% in this past week. That too on financial results which were released. It was at 250 Rand in mid-July. It's now 361 Rand, but it is worth remembering that the share price did peak at 440 Rand in May. Another JSE listed industrial stock that had a particularly good week was Transpaco. It was up 15% in the week to a share price now of 30 Rand a share. It's up 50% since mid-July. This week's move came on a trading update released on Tuesday, which said that headline earnings per share would be 40% higher in the year to end June. So the companies that are doing well are being rewarded by investors here in South Africa. On the way down in the past week, MTN lost 10%, and this after a very good set of financial results saw the share price going higher. It's lost all of that now. Kumba dropped 10%, Northam 9%, Anglo Platinum 9%. Sasol ahead of its results this week, down 7.5%. Investec down by 7%, and Aspen on its results down 5%. So some of those heavyweight stocks not having a good past 7 days. Standard Bank closed the week down 4% after releasing its results on Friday. But as mentioned earlier, I thought Sim Shabalala and his team are doing fairly well at Standard Bank. They've done better, certainly Koki Koeman, when I contacted him after the numbers. Koki has been a little critical of Standard Bank recently. He reckoned that they did better than he'd anticipated, yet the share price easing back a little. This is not too surprising. In mid-July, it was at 150 Rand. It ran all the way up to 171 Rand last week, but came back after the results to 164 Rand. Closing off, the performance of the BizNews portfolio stocks in the past week has been pretty dismal. The only outlier was Purple Capital, which jumped nearly 10% on Friday after the announcement of a deal in Asia, where it hasn't announced who the partner is yet, but Purple Capital will be selling securities, will be selling stocks through this distributor, who's a financial services player. We'll get more details on that in due course. Charles Savage making the announcement on his return from a offshore business trip. Purple's share price R2.21 at the close, and that was R2.02 a week before. But outside of that, it's been pretty poor week for BizNews portfolio stocks, particularly the wild cards. 2U down by 17%, double-digit declines as well for MicroStrategy, Cloudflare, and Uber. Zoom down by 9%, Spotify nearly 10%, Palantir 14% lower. The heavyweight stocks, though, holding on okay. Apple only slightly down on the week, Microsoft 2% lower, and Amazon down by 4%. But it shows you that the way investors in America are thinking now is that the boom of the previous 4 weeks, which suggested that the decline running up to then had been too much, or maybe the boom has been a little bit much, so a little bit of rebalancing going on there. South African stocks held in our portfolios, Purple already mentioned. Absa was down 1%, and Transaction Capital down by 3%.
Hello and welcome to the Rachman Review. I'm Gideon Rachman, Chief Foreign Affairs Commentator of the Financial Times. This week's edition is about China. The Chinese military has just staged its largest ever military exercises in the Taiwan Strait. These came at a crucial time in domestic politics, as President Xi Jinping prepares to extend his period in power against the backdrop of a slowing economy and a society still subject to frequent COVID-driven lockdowns. My guest this week is the US-based academic and prominent China watcher, Professor Ming-Shen Pei. So, how will China handle its growing challenges at home and abroad? Chinese rhetoric on Taiwan has always been ferocious. But the visit to the island by Nancy Pelosi, the Speaker of the US House of Representatives, provoked Beijing into an unprecedented display of military might, to underline its often repeated threat that China might one day invade the self-governing island if it ever declares formal independence. To underline its might and its anger, the Chinese military released a propaganda video, tweeted out by the Chinese ambassador in Washington, and full of sirens, explosions, chanting troops, and soaring ballistic missiles. President Xi can ill afford to look weak at this particular moment in history. Later this year, the Communist Party will stage a crucial congress, when Xi will look to secure a third term as party leader, something that would be unprecedented since the long reign of Mao Zedong. Xi's zero-COVID policy, initially hailed as a success, has been brought into question by the emergence of the highly infectious Omicron variant. A series of draconian lockdowns has crippled business and social interaction in major cities like Shanghai for weeks at a time. Public impatience with this boiled over at a Shanghai branch of IKEA recently, when shoppers broke through a blockade as health officials attempted to seal the site. So how secure is Xi now? And what does he have planned for China and the wider world? To get an idea, I turned to Ming-Shen Pei, professor of governance at Claremont McKenna College in California and author of numerous books on China, including China's Track Transition. We started by discussing Beijing's response to the Pelosi visit. I asked Ming-Shen Pei if it was stronger or perhaps weaker than he'd expected.
It was more than I was expecting because I thought they would have reacted, but not to such an extent in terms of the scale of the military exercise and also the aggressiveness, how close it was to Taiwan. And then I think the follow-on reaction, the follow-on measures in retaliation against the U.S., these were totally unexpected.
So those follow-on measures, what were they?
They canceled a series of military dialogues. And I think in terms of managing a future crisis, these are very important. Defense dialogue, a naval incident at sea dialogue. So I thought that's very, very risky.
So how do you account for the strength of this Chinese reaction? What do you think's going on?
I would say two things. One is that they really want to demonstrate resolve. They want to show both to the Taiwanese and the Americans that you're pushing us too far. We are at the limit of our tolerance. So this is, I think, one at the strategic level. The other is just at a very practical, pragmatic level, that they just want to see how good they are. They're conducting an exercise they've never conducted before, involving joint forces, testing the latest hardware, and also trying to see if they can actually learn something from a very complex operation, such as a full blockade of Taiwan.
Yeah, and I mean, I guess that one of the things that worries me about modern China, sort of viewed from a distance, is that they've had this 20 years of a huge military build-up, combined with a lot of nationalist rhetoric in the press. And it almost seems like parts of the society, maybe parts of the government, in their less rational moments, want a war to sort of test national machismo, to test the rise, to demonstrate a rise.
Yeah, I'm actually not that worried because a military defeat as a result of an attack on Taiwan could be an existential defeat for the Communist Party. So the Communist Party is not going to gamble away its hold on power.
So you think they're bluffing?
Well, it's not bluffing. I think they're trying to show that we're willing to fight, but don't push us that far. What I actually worry about is an accidental conflict. And I also worry about, looking forward, the situation where you have something like a Cuban Missile Crisis moment. That is, China wants to stage a military exercise on a much larger scale with much more destabilizing effect on the regional security, and the U.S. wants to challenge that, sending its own forces. And then you're going to have a very, very delicate and dangerous situation.
So, I mean, just briefly then, talking about the American reaction, if you were, you're based in California, if you worry about an accidental conflict, how do you think the Americans are playing it? I mean, where did you stand on whether it was a good or bad idea for Pelosi to go in the first place? And also the US is now, sounds like they're going to send ships, but maybe not an aircraft carrier. It's a sort of odd calibration they're doing.
Well, obviously there are two aspects to this question. One is the Pelosi visit itself. I think Pelosi doesn't care. She has a record.
What, a record of being pro-democracy in China?
Pro-democracy, pro-Taiwan. And I think in the context of recent deterioration, because it's not just one visit, you have to look at really massive changes in U.S. policy toward Taiwan. And the Chinese side believes that we have to start something here in order to prevent the U.S. from moving further.
And these massive changes include things like meeting Taiwanese officials in U.S. government buildings, which they never used to do, and that kind of thing.
Yeah, the framing of the One China policy and sending military hardware to Taiwan, talking about defending Taiwan and sending Marines to Taiwan to train. So these things, again, the Chinese, of course, have a much more open-ended interpretation of the One China policy. So they believe that the U.S. is now hollowing out. This is actually the official Chinese description, hollowing out the One China policy. And the Pelosi visit is on the border of some kind of official recognition. So I think the Chinese side may have some kind of ground to fear the trend, not necessarily this particular incident. So I would say that at some point, they're going to do something very similar, even with or without the visit. And I think the Pelosi visit, probably the timing is a little bit tricky.
But they were going to draw a line in the water or the sand at some point.
At some point, yes. So that is the timing and the trend. So I'm not going to question the wisdom of...
Because you also get into a tricky thing of whether it's a wise thing or a moral thing,
Yes. And also then you raise the issue of should we actually not do things because the Chinese don't like it? And of course, you will say that, is it really smart for China to engage in such an act of intimidation?
And of course, the other thing that a lot of people spoke about, Ray, the timing of Pelosi's visit, is that it's August. Xi has this critical moment in his political career coming up in October, November, probably November, when the party Congress is meant to give him this unprecedented third term as president. How much do you think that will have played a factor in his thinking?
I think that definitely played a role in raising the stakes because, of course, the Taiwan issue is actually an elite politics issue. A leader who appears to be impotent will be attacked by his colleagues because this is an issue on which a top leader, even a powerful leader like Xi Jinping, can actually be vulnerable. So that is one. And I think cynically, you might say that the right kind of crisis, the right kind of tensions may actually benefit Mr. Xi because he can show that he's strong, he can rally the nation, he is defending Chinese national honor. So in a sort of strange sort of way, Pelosi may actually have helped Xi Jinping.
Because the sort of consensus opinion seemed to be earlier this year that, of course, Xi was going to be confirmed, he would get his third term, go on. Then I think with the problems with the Shanghai lockdown and so on, you began to hear murmurs saying, well, maybe it's not 100% certain.
My view is a 99% certain. He's still going to get his third term. The immediate problem concerns personnel choices. That is, obviously, he's lost a great deal of political capital as a result of the zero COVID approach, because the impact on the economy is devastating. And then the perception that this policy is now counterproductive. To be sort of fair, this zero COVID policy worked until it stopped working. So initially, I think Mr. Xi and his colleagues had a lot to be proud about. And now they're putting out one fire after another as a result of Omicron. As we speak, probably the Communist Party top elites are meeting in Beijings, this seaside resort, to put the final touches on the next political standing makeup. His problem is what kind of concessions he needs to make in terms of personnel appointment.
I mean, it seems to me you can pinpoint a number of things that have changed really significantly in the Xi years. Firstly, creation of a personality cult, the extension of his period in office. Secondly, the destruction of this good relationship with the outside world, or relatively positive relationship. But the third, and maybe it's the most important, was this attack on the private sector and the iconic figures in Chinese business, Jack Ma, and suddenly he's almost a non-person. If people see him in public, it's huge news. And they knocked trillions off the valuations of the big
2 trillion
companies, which, if you were following the Japanese model, these would have been the standard bearers for China, the Sonys, the Mitsubishis, and yet suddenly he's turned on them. So why did that happen? And is it reversible?
Yeah, it is reversible, but it's unlikely to be reversed. I think why it happened, I think it's just one word, because these companies, or the private sector as a rule, has become too powerful for the party to feel comfortable about. So it's really an effort to reassert the control of a Leninist state over this wealth creation engine. And now the engine is sputtering.
And that may be the biggest flaw, really, in the whole Xi model.
Oh, this is one of the biggest concerns business people have, China watchers have. That can you actually make China grow with a statist model? History shows you can't. History also shows that China has grown in the last 40 years mainly because of the private sector.
That was Professor Ming-Shen Pei, ending this edition of the Rachman Review. Thanks for listening. Please join me again next week.
And that's all from the briefing for today. If you enjoyed this episode, follow BizNews Radio now to get all of our interviews and daily market updates as soon as they're published on your